We did have the results yesterday which came out of Godrej Properties, and on a sequential basis, if you look at their numbers, they were a bit disappointing given that the net sales were higher. This is on a quarter-on-quarter basis by just about 9% at 143 crore rupees vis-a-vis 131. Though on a year-on-year basis, remember the expectations were that because of the high base effect, you would see higher net sales, so 196% higher is what they have clocked in. Let's get in the management. Pirojsha Godrej, Managing Director and CEO of Godrej Properties, joins in to talk more about the road ahead. Thanks very much, Pirojsha, for joining in on the show. To start off with your numbers this time around, you have seen that, on a sequential basis or over the past 1 year, the numbers have disappointed. What were the main reasons for traction not being seen?
Well, great to be with you. I think the numbers we've reported this quarter have been quite robust. So, I don't know why you say that necessarily. Our total income has actually grown on a year-on-year basis by almost 150%. Our net profit has grown 84%. So I think we have seen a reasonable amount of traction. That said, there have been some disappointing aspects as well. Our bookings growth year-on-year has only been 5%, and I think that's largely been led by some delays in launches of new projects because the regulatory approvals have been a bit delayed. But broadly speaking, I think the numbers we've shown this quarter, given the macroeconomic sentiment that's been prevalent, has actually been quite credible.
Sure, Pirojsha, but the only reason I did say that was because you had your margins which have come in at levels of 14%. The quantity of square feet sold also has dropped, and you mentioned some of the other hurdles, but do you think in the coming quarters some of these issues will be ironed out?
I think our EBITDA margins for the quarter were actually 27%, which is actually an improvement quarter on quarter. I think there are some issues facing the sector. We do expect going forward that things will look better in calendar year 2012 for several reasons. On the macroeconomic front, we think interest rates now having peaked and likely to start declining will be a big sentiment driver for the sector. We also think that political situation and economic reforms will be more likely to improve once the state elections in February and then the budget in March are over with. So we're optimistic on both of those fronts. And we think there is quite a lot of pent-up demand in the real estate sector. And once these changes happen, and also once the regulatory approvals are received for some of our key projects, like our project in Chennai, the next phase of our project in Ahmedabad, and several projects in Mumbai, we expect to see robust growth on a quarter-on-quarter basis in Q4. And we expect next financial year to be a very strong one as well.
Right, Pirojsha, morning. You did mention those projects that are on the development stage, and would like to get in then, some more details about that. If you could give us for the quarter that's just gone by, the breakup of sales that have come in from the Ahmedabad project specifically, and what is the progress on the newer phases of the Ahmedabad project?
So we've had good construction progress on our Ahmedabad project. So some of the old phases are likely to start being delivered to customers later this year. In terms of new bookings, we had about 40% of our total bookings for the quarter come from our Ahmedabad project. So we continue to see pretty strong volumes there. Since the project was launched, we've had about 3.75 million square feet sold in the project, which as far as we know is about the most that's been sold in any real estate project in India over the last couple of years. So I think that project has been doing well. We expect to launch another substantial sized phase of the project in this quarter, and we expect that to do well as well. So I think broadly speaking, the project is going on a very positive note. Of course, there has been a little bit of a slowdown over the last few months, given that is the situation across the country in the real estate sector. But broadly speaking, I think the project has been one of the most successful Indian real estate projects in recent times.
And Pirojsha, I also wanted to get in a perspective with respect to your BKC project. What are the capex plans for the same? And with respect to the project launches, the timeline?
So we've quite recently still signed the deal, which is in about August of this year. The planning from an architectural point of view is going on well. We've already made some large payments to take on debt on the project and also to MMRDA. There will be continued capex, but we're looking over this current calendar year at looking at opportunities for private equity or other ways of monetizing the project. So we hope to have some announcements on that front over the coming months.
Okay, Pirojsha, just talking about, how the situation is looking on the debt front then right now. What is the total debt that you've got on the books and what's the payment timeline looking like?
Our current debt is about 1900 crores and our gearing levels are just under 2:1. And that is, typically we target a range of anywhere from 1 to 1.5 to 1 debt equity. And we would like to bring the gearing levels within our target over the next few months. We have several plans to do that. We're looking at monetizing several of our commercial assets in places like Kolkata, Chandigarh, Mumbai. We also think that the new launches that we have planned over the next few quarters will help tremendously. We're also looking at doing some entity-level fundraising. We had taken last quarter shareholder approval to raise up to 750 crores. And SEBI has recently introduced the Institutional Placement Program, or IPP, method of fundraising for promoters whose shareholding is above 75%. We think that is a very interesting mechanism and very well suited to the company's needs. So over the next few months, we may also look at raising about 500 to 600 crores through that route. So with all of that, we think the debt levels will be well within our target range over the next few months.